Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. Joined out there in the chat by my good friend Cameron May, 20-plus year veteran of the financial markets. And I am joined out there by all of you. So welcome to all of you who are here with me early this morning. We're going to get started right away. A couple of quick housekeeping items. Remember, if you're going to in the chat, if you're here in the live version, participate in the chat. That's what Cameron's here for, to help you answer those questions along the way. If you're here in the recorded version, follow along and leave your comments and questions in the comment section of the recorded webcast, and we'll respond to those as well. And as we get started again, thank you all for being here. We appreciate it. A couple of quick housekeeping items, though, that we need to take care of, and I want to get right into the market, which seems to be a little bit active this morning, so that's a good thing. Remember that first of all, everything we talk about simply for illustrative and educational purposes only, is not a recommendation of any particular symbol or strategy or idea. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. Make sure that you understand those risks. Read the risk disclosure statement for futures and options prior to even considering trading any futures products. Make sure that you understand those characteristics. Remember that futures trading requires separate trading authorization. We may talk about virtual currency derivatives, including Bitcoin and others today. In fact, that comes as a special request from some of you in our feedback surveys. So before you consider those strategies or trading any of those products, make sure that you read the NFA Investor Advisory, Futures on Virtual Currencies, including Bitcoin, and the CFTC Consumer Advisory, Understanding the Risk of Virtual Currency Trading. Remember that these trade as a digital representation of value that functions as a medium of exchange, a unit of account, or a store of value, but does not have legal tender status. So it's a fiat of value, but hey, what isn't? So we'll talk about that as we get into this discussion. Just remember that there is the potential for volatility, there's the potential for movement, and there is substantial risk in trading that product. Now, we're going to talk about we're going to be using the thinkorswim desktop software platform this morning, specifically the paperMoney version. Remember that the paperMoney version of the platform does not do certain things that the live trading platform will do. So as you move your practice from paper trading to live, recognize those differences. Number two, remember that this is a great learning environment, but it's not a guarantee of future success out there in the real world. We're going to use some technical analysis this morning. Remember, technical analysis is not a guarantee of what's going to happen either. Neither is fundamental analysis or probability analysis or anything else. All of those are theoretical. But Schwab doesn't recommend the use of technical analysis as sole means of investment research. Now, when we talk about stops, which we will this morning here on futures, make sure that you're aware of this idea and concept in the futures market. Stop order is not guaranteed in execution. So due to exchange rules based on certain conditions at the time of activation, the exchange may reject or substitute an exchange-designated limit order for an originally triggered market order. What that means very simply is if you have a stop order that triggers a market order to the market, that order is going to be substituted by the exchange with a limit order based on protection points, a range in which that order will be filled. So very similar to, but the numbers a little bit different. Very similar to if you were to issue a stop limit order and define a limit price for that order. Given that, there is the potential that that order does not get filled. If price does move through that protection range quickly, there is the possibility that that stop limit order essentially could not get filled. So be aware of that, and we'll talk about some of those characteristics as we get into this discussion. So let's jump over to the thinkorswim platform here really quickly. I've got a couple of trades that I've already put on this morning, and one that I wanted to look at here really quickly. This is /MHG. I've already got the trade set up. We just need to change some numbers here. But I've got this set up for the initial move that's going on this morning, starting to look at this for the possibility of a bull flag bounce. Left-hand side is my longer-term chart. Right-hand side is the shorter-term chart. This is a 5-day, 5-minute, or a today 5-minute chart. You can see the big momentum move as copper, this is the micro copper contract, starts to rally here this morning. It's rallied up, it's pulled back a little bit, it's bounced off of just about the 78.6 Fibonacci level. So I threw the Fibonacci ruler on here with the bottom of the move down here at 4.4578, the top of the move up here at 4.5149, and that puts that 78.6 kind of right here at about the 4.5 range. And then the 161 extension comes in right around 4.5501 as an extension. So the way that I'm putting this particular trade together in terms of that initial move to the upside, in this case, is just simply looking at taking this quick move, theoretically quick move, up to this Fibonacci extension level. Not looking for this to extend beyond that, although it potentially could. So if it goes in the opposite direction, because remember the last time we put on a micro futures trade on the micro copper futures, we got caught in this move right here. And we did get stopped out, but had we left that trade on, there was a pretty big downdraft. We kind of picked the wrong direction there. So looking for this initial direction move. So I've already built the trade. Let's kind of walk through it. I'm going to pop this up from the bottom. My buy stop limit in this particular case, or actually my limit order to buy the contract in this case is currently set at 4.501. So right now we're at 4.51. So I've got to bump that a little bit, or this order is not going to get filled because it would be beyond our limit order. Right now, my stop, or my target order, my take profit order on this particular trade is up here at that Fibonacci extension at the 1.61 extension at 4.5501. And my stop is set at that 4.4702. That's this level right here. That's below, just right about the 23% retracement on the Fibonacci line. So kind of looking at this, even kind of holding up with Fibonacci's from that standpoint, we're still using those to kind of confirm where those levels of support and resistance might be. So this is pulling back a little bit, currently trading at 4.05, or excuse me, 4.509 between 4.51. So let's do this. I'm going to bump this limit for just a second. I'm going to bump this up to 4.51, and we'll see if we can get it to kind of bounce, pull back a little bit, and let us into the trade. It might not. So let's do this. I'm going to do 4.53 and just see if we can get into this trade as we set this up. So everything else still staying the same. We're going to click on confirm and send. This is an OCO order. First triggers OCO order. Again, these are going to go out as, this is going to go out as a limit order. So that's going to trigger at that limit price and then fill at that next available price. This is a market stop order. So when that stop is triggered, if that stop is hit, the order then is going to be worked by the exchange as an exchange designated limit order. So I'm going to click on confirm and send. We're underneath the limit now to enter the trade, so we should get filled theoretically. Let's see if that happens. Confirm and send. We're going to send this to our futures group. Read through the order, make sure that this is what we want to do. We're aware of the transaction costs. We're going to go ahead and send that order off. And we got filled at 4.508. So we're now in the trade. And yeah, you're right. Numbers are hard this early, Carol. I agree. But at least we had that trade already set up and kind of in place. So just in general terms, let's talk through what this expectation is on this move. And given the fact that the name of this particular webcast is Trading Futures, not just Intro to Futures, I want to get some movement going here and talk about this. So this is the move that I was measuring with the Fibonacci, right? That's kind of the flagpole move. Now, there was kind of a little bit of a bull flag move right here in the middle. That's fine. but I also noticed that it was pulling back from that 100% level right down into a level of support. Now we're looking for this move to the upside. So there is the possibility that this could run back into this previous resistance here at the 4.5149 level and fail. Because there's no guarantee that this is in fact going to go out here to the target, which is up here at 4.5501. But this is a typical bull flag type trade, whether you're trading a bull flag in an equity trade, whether you're trading a bull flag with an option to take advantage of an option, leverage. From a technical analysis perspective, this would be a typical bull flag type of trade. Now, there's another way we could have set a potential target on this particular trade. So let me kill my annotations here. And I'm going to move just to, so I'm going to maximize this particular cell in my grid. This is the shorter term cell in the grid. I'm going to bring the momentum window, that MACD histogram window, down a little bit. And I'm going to grab my drawing tool. So if this is the flagpole, right, of this trade, that move to right there, then some traders may simply take that flagpole and duplicate it and take that flagpole and put it up here, maybe on the bounce or on the breakout. You know, there's a couple of different schools of thought. I'm going to go back to that bounce level, to where that support level was. Now, we had a close above the high of the low candle. That hold, hold refers to close above the high of the low day. These are 5-minute candles, so I don't know how you put that acronym in there. Close above the high of the low 5-minute candle. I don't know what the acronym is for that. I'd have to think about it. But that's what we had as kind of an entry validation in terms of the technical analysis. And so looking for that potential target, if I were to kind of look over the horizon here a little bit, that target extends beyond where my horizon is. So I'm going to give myself a little bit more time to the right, and I'm going to go to the gear icon up here at the top, and I'm going to go to the time axis, and I'm going to add another 20 bars, not 130 bars, but I'm going to add a total of 30 bars to the right. So that's 35-minute bars. And so you can see, here's where our target that we set using Fibonacci's was at 4.55. Here's where the flagpole target is at 4.5582. There you go. Hey, BJ, wow. See, I knew you guys would get it. The whole fives. Okay, yeah, something like that. I don't know how to pronounce it. But you can see how close those two targets are to one another. Now, in terms of time progression, there's another element to this. And one of the tenets, and Cameron May teaches getting started with technical analysis. He also teaches advanced charting techniques. And one of the things that we talk about a lot in technical analysis is symmetry of movement, symmetry of the price movement, and symmetry in terms of time. So typically, not always, but typically, a projected movement of a particular price pattern, like a bull flag, may take the same length of time to get to its target that it took to create that to begin with. So if we come back and we say, all right, look, this took 5, 10, well, let's take this one, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70, 75, 80, 95, 100, about 100 minutes, a little over an hour and a half to get to the culmination of that flagpole. Then from the bounce to the target should take about another hour or so, theoretically. Sometimes futures move fast, sometimes futures move slow. Yeah, I like that, David. That's good. A Hulk close above the high of the low candle. Good. I like that. That's a little cleaner than close above the high of the 5-minute candle. Good. That's good. BJ, yours was good too. I appreciate that. Cameron, thank you for posting that playlist there. So here we have now this candle, this 5-minute candle, kind of breaking out in that range and starting to move higher. So we picked, at least at the moment, we picked the right direction. Not a guarantee, and again, not a recommendation by any means. But we've at this point put this trade together from a technical perspective, and so far it's moving in the direction that we expected it to move. It hasn't yet broken because that 5-minute candle's still there, but we're still looking for that to move to that upside. Now, I just want to do one thing here really quickly, if you will indulge me, because I know there are always a lot of questions about Fibonacci's. And I just want to see how well this holds up. So I'm going to zoom out just a little bit here in this time frame. I'm going to keep it kind of right there so that we can still see that target. And I've got the Fibonacci's on here that I drew to establish that flagpole. And we talked about that time series, that time expectation. So knowing that Fibonacci's also have theoretically a time component to them, I'm going to grab my Fibonacci time series and I'm going to do the same thing. I'm just going to go to that starting point. And I'm going to establish that starting point right there. So notice something. Now what this does is it graduates time in Fibonacci ratios. And you notice, okay, here's the thing. I would say something like this. Fibonacci's are coincidental probably half the time. Fibonacci's tell us something important about the progression of price or time, maybe 78.6% of the time. That's a Yogi Berra joke, somewhere buried deep in that, right? But notice each one of these hacks, these time hacks, represents a Fibonacci ratio. So this is a time graduation based on Fibonacci ratios. And I just happened to notice that little confluence right there. And again, it's very, very likely, almost entirely coincidental, that my flagpole target trend line intersects my 161.8 extension to the upside almost exactly at a Fibonacci time series hack here from a time perspective. So here's what we might be thinking. 7:40 Mountain Time. Let's see. Yeah, so no, we're at 7:40 right now. No. So when is that? Okay, so there we go. Looking for this to move, because I don't think that's in 7:40. That's not in the right time frame. Because we're not quite there yet, are we? No, see, we're at 7:48 Mountain Time right now. So that's my time scale down on the bottom is different. But looking for it to hit right there in terms of that time frame. So now what we're doing is we're measuring projected price move in time and price. That's exactly what we're doing using Fibonacci. So we kind of have that confluence. Does it mean anything? Does it tell us anything? You decide. I'm going to let you use these tools. I just wanted to show that in terms of that Fibonacci time series. And then if we really wanted to get crazy with Fibonacci's, you can do some other cool Fibonacci stuff, right? We can do Fibonacci spirals, and you could do Fibonacci arcs. We could do Fibonacci arcs. I think Cameron's taught, I'm pretty sure, and I'll let Cameron kind of tell us about that. Maybe he's got a playlist. If he's done like some of these obscure Fibonacci components like arcs and spirals, which are kind of cool. Anyway, all right, cool. Now we've done that. That's MHG. That's our micro copper futures. And it's not quite yet breaking out. Our next little candle kind of popped back down here. So it could go the opposite direction and stop us out of the trade. Our stop is down here at this level. Now, there's one other trade that I put on. I want to go back to our monitor tab. And I put this trade on earlier just so we could have something working already. And this, again, came as a suggestion from you in our feedback surveys, which I don't see one in the chat yet. But if there does happen to come in a feedback survey, we will let you know. You can fill that feedback survey out. But the other trade that I looked at this morning and put on before we got started here this morning was this one, /MET, the micro ether futures. So let's go to the chart and let's put this on /MET and kind of see what was going on here. So this is starting to move against me. I got in on the bounce here, looking for, once again, that bull flag bounce. It has now started to move back down in that opposite direction. So I've got to stop in place on this order. Let's look at the monitor tab once again really quickly and look at the working orders here. So I've got that MET stop in place to close this down. And again, this is going to be a market stop. So this is going to get worked as an exchange designated limit order within those protection points. But my stop in this particular case is triggered at that -137 half off of where we were. So if we were to look at where that stop is, let's come back to our chart and let's go up here to the gear and let's show our orders and click on apply and OK. That's where I've got my stop, is right down off of that support level here. So I was giving it a little bit more room to move to the downside. See, Cameron, I knew you had a webcast there that might help out with that, with understanding some of those Fibonacci tools. So I didn't put a target on this particular order because I was looking for this to continue to make that move to the upside. Because if we go back to our two cells here, this was making a pretty strong breakout. And you can see where this support level is. If we zoom in a little bit on this chart, you can see where I've drawn in that support level that would take us out of the trade. That's slightly above where this gap exists on the longer term chart. There's the gap level on the longer term chart. So if we zoom back out, this was a breakout on a daily basis above these two previous highs, right? That double top right up here back in the December timeframe. We saw the breakout above that double top. We saw a little bit of a price gap to the upside. So capturing this move to the upside, we may still get a little bit of a bounce. We're underwater just a little bit on this particular trade right now because I got in on that bounce in that move and looking for this to continue to move to the upside. So the idea behind this is using the shorter term chart as an entry and a potential exit, but as this continues to move higher, continuing to follow this upward movement based on this breakout. So ETH still maintaining some momentum, MET maintaining some momentum, and starting to see that move to the upside. All right. One other thing I wanted to do really quickly is, as we kind of roll into the next part of this discussion, is where I was looking for some of this early movement. That's always the question: where are you finding these futures trades that are moving? And so one of the things we've done, we've looked at other ways to find this. Today we're going to look at the Market Watch tab. And all I did in the Market Watch tab is I went to the quotes sub tab and I went to the public watch lists. Now, there are a couple of different futures watch lists that are already built here in the publicly available watch list within the thinkorswim platforms. So you don't have to go anywhere, and I didn't really build anything new for this, but there's cash settled futures as a watch list. There are micro futures, which is the one that I'm choosing right now. There's physically settled futures. So that's going to be all of the, or many of the commodity-based futures. Now, remember, physically settled futures, one of the mythologies of trading physically settled futures, at least with thinkorswim, is that if you were to hold that contract to delivery and you don't do anything with it, that a tanker truck of crude oil is going to back up to your swimming pool and unload, 42,000 barrel or 42,000 gallons of crude oil into your swimming pool. That's not going to happen. You're not going to take physical delivery of 1,000 bushels of corn, or 42,000 gallons of crude oil, or whatever it might be, or 1,000 ounces of silver. That might be nice, though, wouldn't it? Have somebody bring you 1,000 ounces of silver. But that watch list is the physically settled futures. You can see what those physically settled futures are. And now I'm going to go back to this public watch list. The one that I'm using this morning is this one, the micro futures, just keeping those. Yeah, just as well, what if I don't have a swimming pool? Yeah, then that's a problem. In the cement pond. Yeah, exactly. Up from the ground came a bubble in crude. Okay, so these are the micro futures. So we've got MES, MNQ. We've talked about many of these, right? The 1,000-ounce silver future, the micro copper futures is the one we've traded this morning. The micro ether futures, which is the one that we've also traded this morning. And then I borrowed from some of my other technical analysis watch lists this breakout column tag right here. And this is a code or a think script that Ken Rose started working on, Michael Fairborn has refined, and I'll share it with you here in just a second. But what I had to do, because I use that 5-minute chart in this class, we've been using that 5-minute chart for entry, I adapted this breakout column header, and we don't have any breakouts going on right now. But what I did is I adapted that breakout column header, and I'll show you where that is. That script does this. So I'm going to go to customize, and here's that breakout script. So it's looking for the breakout of a recent high. That's where I found those two that we were just looking at. And here's the script. But by default, the aggregation period on this particular script for that breakout is a day default, which didn't really do me any good if I'm looking at the shorter term chart. So I had to come in here to the script, and I do that by clicking on the little scroll icon to the left of the name. And I change the aggregation period to 5 minutes, because that's what we're looking at on that 5-minute chart, 5-day, 5-minute charts, or today's trading 5-minute bars or candles or periods, right? So this is a 5-minute period aggregation looking for this time frame. So what I'm going to do is I'm going to share this with you. Now, what you'll have to do is this. So I'm going to click on share. Now, remember, anytime we share anything, it is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. But take that shared script. If you take that shared script, I'll show you what we'll do. And again, this is something, if you have not done so already on your thinkorswim platform, something that becomes very helpful, because you can share scripts and you can share grids and watch lists and things like that. But if you come up here to the setup at the top of your thinkorswim platform and you select open shared item, and then you paste that script in and you click on preview, and then you call it what you want to call it. And this is important. Name it something identifiable, like I did with breakout. Name it something identifiable, and then click on import. Now you're going to say, where did it go? So then once you've done that, once you've pasted that in, and once you've named it something, and once you've imported it, then when you get to your watch list, you can come over here to the gear icon, and you can click on customize, and you can then type in to all columns breakout, and there it is right there. That's our breakout script. And then you can put it into the list of column headers that you have, and then you can use that. And so now today it looks like we've got a couple of different breakdowns, because this will also show breakdowns. So here's one that just popped up in terms of that 5-minute candle breakdown, and that's /MNQ. And I think a couple of you were commenting on this in the chat as we were going along. So it's giving me a breakdown. So let's go to the chart for MNQ and see what's going on with the chart on MNQ. So we've got a bunch of Fibonacci's on there. I'm going to remove those so that we can kind of see what's going on here. And there's that one that we're going to remove. So we had a number of those fibs on the chart. So it looks like on the longer term chart on the MNQ, this is the mini NASDAQ. And remember, tick size 0.25, tick value 0.5, point value is $2. So this is a tenth of the big contract. Notional value is going to be a little bit smaller. It's going to be a tenth of the big contract. But we can see that maybe we've run into that resistance level here on the /MNQ. And it's now starting to make that move to the downside. Now, this might be important for someone who has, say, for instance, a portfolio of stocks like this one that has a number of positions that are in the NASDAQ. So if we were to come over here and we were to change this beta weighting to /MNQ, let's beta weight our portfolio to the MNQ. And now we can see that we're sensitive. We're positive the MNQ here to the tune of about 3 deltas. So this isn't hugely sensitive. A bunch of these are small caps, probably some greater sensitivity perhaps to M2K, the Russell. I think that's kind of how we set this portfolio up. But if we were concerned about this pullback in the NASDAQ impacting this portfolio, we could use that /MNQ futures contract to offset some of this adverse movement. So we go back to the chart and we say, all right, look, the MNQ is moving to the downside. And there's the potential that it might, oh man, we're still on Fibonacci spirals or arcs. Let's go back to our trend line. So let's draw in this horizontal trend line and look for that move to the downside. So now what we may do is potentially look at going short the /MQ as an offset. So notice we've got falling momentum here. We've got falling momentum here on the longer term chart. That CCI is pushing back down from that kind of extreme bullish trend that it has been in. So maybe that momentum is waning a little bit. We got a little bit of a hammer candle here though. So we'll see if this continues to move to the downside. But the idea might be, in this case, that we use a /MQ contract short to offset some of those positional deltas in our portfolio, because we're essentially net long, right? Net long that delta for the /MNQ, the NASDAQ. All right, so let's do this. Knowing that this potentially could bounce at this level of support, but knowing that we're also, relatively short on time, I'm going to enter a position here. I'm going to go short the /MNQ to demonstrate hedging this portfolio using a futures contract. Now, hedging using a futures contract to offset to offset delta sensitivity in an overall portfolio is like, rather than using a scalpel to remove something from someone's body, it's like using a big hammer. It's a blunt instrument, and you can overhedge very easily. So, properly warned you be, says I, in this case. So let's do this. Let's go short the /MNQ, even though it's bouncing right now, because I want to demonstrate that possibility of that move to the downside. So I know it's bouncing. I understand that it's bouncing. It doesn't guarantee that it's going to continue to go up, but I want to demonstrate this particular context and concept. So we're going to right click and we're going to sell one contract of that /MNQ. And we're going to put that in our stocks group so that we see that offset of that hedge to that delta sensitivity. Initial margin requirement in this case is $3,249. That's going to be a significantly smaller initial margin than if we were using the /NQ, the big futures contract. And then it is very easy to overhedge by using that big contract. The micros give us a little bit more precision. So it's like using a smaller big hammer. And so I'm going to go ahead and I'm going to send that order off, and we'll see if we can get in. And it popped up above our limit. It's going higher. So I just, again, to demonstrate this, I'm going to cancel, replace that order just by dragging it, and now we filled. So we are in the trade. It filled before I could do that cancel, replace. One note, and that's a good note, and this is a good point of conversation. Did you notice what happened here? So I had that order in place, okay? I had that order in place, and I went to cancel and replace the order. So I grabbed the flag on the chart and moved it up physically. And the thinkorswim platform brought up this order description box. Now, you notice that while I was talking about this description box, the order that was still in place, already in place, filled. Now, if I went to send this order, what do you suppose is going to happen? Any guesses? It's going to reject the order because it's trying to replace that tagged order. Just be aware of that there is the possibility, if you didn't do it as a cancel or replace, or you tried to move the order, or you canceled the order and then moved it, you could run into a situation. And I just want to be absolutely fair in talking through this. Always a good idea to RTFO, read the freaking order, so that you know what it is that you are trading. There is the possibility that that order could get filled again. So just be aware of that. Make sure that you are aware of that circumstance so that you don't end up over trading or into too large a position that you inadvertently didn't want, right? So let's go back to the monitor tab. And now that order filled. So that order went, here's our MNQ. And so notice that the two deltas of that contract subtracted from that 3 long deltas of the portfolio. So if we were to move this, and this is the easy way to kind of show this in the monitor tab. If you set the monitor tab up and you create groups for your positions. If I move this futures contract position out of this group, and I move it to my temp group just momentarily, you can see that my deltas for this portfolio, for this group of stocks, goes back up to 3.72 MNQ deltas. Long 3.72 MNQ deltas. Well, MNQ is moving down. So I want to take that sensitivity out. I want to reduce it a little bit, make this a little more delta neutral. So that's why we added this short position in /MNQ. And to show that, I'm moving it back to my stocks group. Now it's there. You can see the -2 delta. That reduces my net sensitivity to deltas, to MNQ deltas, to 1.72. So this becomes relatively delta neutral. So this is going to be on your monitor tab at the top of the position statement. If you uncheck it, it makes each one of those positions their own position delta. So AbbVie has a delta of 1 times 100 shares. AWR has a delta of 1 times 100 shares. The MNQ, in this case, that contract has a delta of -2 because we're short the contract. So I go back to beta weighting, and now I can beta weight it to whatever symbol I want to use. We've talked a lot about it. There's a bunch of webcasts out there. I'm going to show you where to find those webcasts here in just a second that talk about beta weighting. But I wanted to demonstrate this again. This came as a function of requests from you in feedback surveys to talk about beta weighting and using futures as a means to beta weight a portfolio. So let's see what we've got going on right now. So we've got that /MNQ, which is working against us just a little bit, but it is there in the event. Now, that being said, we didn't put any supports on or any stops on that or any price targets on that. But what we can do, let's go back to the chart, and I'm going to put an alert. Now, here's something to pay attention to. I'm going to put this resistance area right up here where that double top was. And I'm going to put an alert here. Now, to be fair, alerts are great. Alerts, however, are not guarantees. What if you're not listening to your phone? What if your phone is dead? What if there's a 5G outage? What if you don't hear it? What if you're on a crowded subway and you don't hear that alert? So there is the possibility. So don't rely on an alert as a guarantee. All this is simply doing is telling you, and there's the possibility that you could miss that alert telling you. So you got to take action here if you're going to take action. So if we put this on as an alert, so if the /MNQ goes above that level at which we are specifying, then send me an alert. Play a sound, send me a message on my mobile device. And we're going to click on create. Now, we could at the same time look at putting a stop order here. Right click, and this is going to be an order to buy. And it's going to be an order to buy to close at that level. And we're going to put that back in our stocks group because that's where this one resides. We click on send, and that's going to be in order to take that. And we close that down. So you know what I did? Did you notice what I did? Anybody notice what I did? And I'm 100% willing to live with this one because I did something wrong there, didn't I? I clicked on confirm and send while that was a limit order, right? To buy that back. And guess what? It bought it back, and it bought it back where the market was. So I should have made that. I should have made that order a buy stop, right? Because I didn't want to buy it back until it got up to this point. But I made it back as a buy order. So if I right-clicked there, and I clicked on that order to buy, by default, that order is going to be a buy limit, which gives me a limit at which that price is going to be bought. So what I should have done, thank you, Cameron, RTFO. Yeah, you're right. That's echoing in my head right now. I should have made that a buy stop at that level instead of a buy limit, because all it did is it just bought it right where it was. So now it's taken that order off. Live and learn. And when you do that, recognize that that happens, and that's okay. We're going to place inadvertent orders. It happens. So know what it is, be aware of it, react to it, and move on. So thank you for letting me be human in this discussion. So a couple of quick reminders here before we go. Here's where you can go, schwab.com/futures, to learn more about futures trading overall. There's some great insight and content here about trading futures. If you want to come here to Schwab Coaching, so schwab.com/coaching, this is where our live webcasts are, as well as our schedule of in-person events. And then if you go to youtube.com/@TraderTalksWebcasts, you can do this two places. One, right at the bottom of the screen right now, you can click on subscribe, or you can click on subscribe when you come here and type in the words beta waiting. And now you've got lots of webcasts that talk about using beta weighting in your portfolio right there. All right. Some great resources. My thanks to Cameron May. My thanks to our great support staff, Andrew and Gabe, and our reviewers, Mindy and Nikki, and everybody else who helps to make these webcasts possible. Thank you for being here. Follow us on X at Ben Watson CS, at Cameron May CS. Thanks, Cam, for helping out, and thanks to all of you for being here. We'll be back again. Well, we've got a whole slate of webcasts today. I will be back tomorrow teaching index options. We'll see you again soon. Take care, everybody. Bye-bye.